Hey, good morning. I think it's officially the last trading day of the year? Is the stock market going to drop 800 points or rally 1,000? I don't know. So let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Well, that's a weird camera angle today. Huh? Weird, right? Can you see this? Samsung! 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 So I'm going to throw away the 75-inch screen. I don't like it. I don't know. I'll either give it to a kid or I'll smash it. I don't know. We'll find out. But anyways, I'm waiting for the rig. I ordered the rig a week ago, or the machine, and hasn't arrived. So I pinged them yesterday. I'm like, "Where's my machine?" And they're like, "Oh, yeah, it's being shipped today." I'm like, dude, how long were you gonna wait? So, anyways, got plenty of time. By the way, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Very nice to meet you. Please visit Traders Way to open up a foreign exchange trading account. You can have an ECN where you pay no spread whatsoever, or you can do a variable spread where most of the time, under most market conditions, you get a very favorable price based on the interbanking system. But if you decide to choose a fixed spread, that's advantageous during high volatility times, especially like news trading, where you don't want the spread to be variable. Probably cost you half a pip to a pip more, but under many circumstances, that's very favorable. So you're away at Traders Way with Traders Wayne. So if you're enjoying these educational webinars, if you're learning patience and discipline, technical analysis, fundamental analysis, and that kind of stuff, and you really appreciate these webinars that I do even during the holidays like today, then pay it back. Visit tradersway.com, open an account. So, how are you? Comment allez-vous? A lot of volatility in the market. Everyone's freaking out. I was listening to Bloomberg television today, and I don't think they could get any guests to come on during the holidays because all the big money is out in the Caribbean now, right? So they had like a writer and another, I don't know, they just had basically three Bloomberg people talking. I had no idea what they were talking about. It was strange. I was trying to come up with an analogy like, you take three people out of a country that's never heard of or even seen baseball before, and they do a live broadcast of a baseball game describing what's happening. Like some guy just caught the ball now, and oh my God, he took out a bat. There's a bat. Oh wait, no, okay, yeah. It was just really strange. It was really, really strange. Okay, great. So I don't know what that means, but luckily we have each other as a trading community, so that we do understand, so that we don't rely on that. I think I told you many years ago when I was walking through Bloomberg, I had finished They do some screen testing and stuff, so they take you into a sort of a more of a meeting room than anything, put a camera in front of your face and ask you about 25 questions to make sure you're not the type of person that freaks out and stuff. And once that was done, we're just kind of walking around the studios and stuff, which is kind of neat. And then we're walking through the offices and we're just talking with people. And then we stopped by the producer's cubicle. And she just had a stack of Forex books that she was just burning out on her train ride. And that's as much as she knew about Forex, and because somehow she got the Forex stuff thrown at her. And great. So there's the expert. Bang out a couple books and you're the Forex expert for the television program. So anyways, luckily we have each other as a community. And I think it's really, well, I know it's really important. So thank you for being in my community. Thank you for being here every day. Thank you for being a client to Traders Way. I think it's really important, and I hope you do too as well. Okay, so let's reverse. Well, let's just go in here. WTI, one of the things we talked about yesterday is I'm wondering if it's a good opportunity to start buying oil, and oil would be sort of like a turnaround thing. Right? And we had this as sort of the trade plan. Now, here's the thing. I don't actually expect that to happen, but I might buy it anyways. And just sort of manage the risk down. If it falls further, then I just take a break. But I think there's still a reasonable chance the stock market comes down next month, and then we sort of find a bottom and flip-flop around. I think we're going to see that in a lot of things right now is my current thought, where there's no need for oil to go up, let's say, but the downward pressure may be over or nearly over. Like, I don't think oil is going to 35, so why not buy it at 45, right? Investment, not trading. And the same would be for the stock market. Like, the stock market maybe wouldn't go down any further, but no reason for it to go up. Now, I mean, maybe in 6 months, but, but maybe a 20% decline is the proper time to buy. Of course, we know the first opportunity to buy the stock market decline is 21.4%, right? So we know that. And I think we hit that on the S&P 500, right? Or is it the Dow? One of them. We got that decline, so I'm sure you bought the stock market. Okay, cool. But it doesn't mean it rallies up and makes higher highs. It could, and it will. But in the first quarter, no. So when? Well, I think maybe earnings season is going to be important on that one. I think the Fed telling us more information about what they're going to do in the future. And then I think that OPEC information, learning about whether they're truly they're truly cutting oil inventories or oil supplies. I think all those things might be some key news to decide whether this goes up or down, right? I don't think Trump and Xi are going to make a real deal. I think they'll probably come out with a false deal in the first quarter, and a real deal maybe the third quarter. And at that point, we can get a really nice stock market rally too. But I think they'll talk about doing deals for the next 6 months. But, China has a long-term point of view of things, right? And if the Democrats come in and kill everything that the Republicans want to do in the House and the Senate, what will Trump do? Have you thought about that? Because the first thing that's going to happen is impeachment and all that kind of stuff, right? And the whole government's not going to do anything for 2 years. So what will Trump do in a situation like that? He'll do things where he doesn't need the Democrats. AKA negotiate with China. So anyways, I guess I should get rid of this. Oops. We'll leave that. Yeah. So, yeah, sort of like we were in here. I might be open-minded to buying it. It's something that says like granola bar with peanut butter and chocolate flavoring. Oh, Guy's thinking oil inventories will drop this to a double bottom today. Yeah, I'm not talking today. I'm talking about the next 6 months. Do I think oil will be at 35 or do I think it'll be at 55? Let's just say $10 above, $10 below. Will we be at 35 or 55? I would still venture to think 55, but there's no technical analysis to confirm that. So I have to be very open-minded that I'm right, because what we need is something more like this. I think what we'll get is, let me change the color. I think what we'll get is like this, and down, and up, and up, and then up. I think we'll just get all over the place over the next many weeks. Okay, great. All right. Gold. Well, we're doing well. We've now hit a 200% Fibonacci extension. And we're at, what is this, R3? Wow. Our plan was to buy this dip and take it up to R2. We've made it to R3. Oh, sure, Ross. Sure. For sure. So anyways, that's interesting, huh? Euro dollar. Bop, 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 bop. What do you think is interesting here? The dollar's weak. Way interesting, don't you think? And we were talking about this, several times over the last couple of weeks. The yield on the 10-year dropped from, I don't know, I'll make up a number. I think it was 3.3% down to 7%. Okay? That's a significant drop, which means people have been buying the 10-year T-note. And we talked about this yesterday specifically about that's what happens. That's what's supposed to happen when there's a decline in the stock market, right? People get out of stocks and they buy bonds, or in this case, treasuries. Fine. That's what's supposed to happen. And yes, there is an inverse relationship between price and yield. So if everyone was buying the 10-year T-note, price went up, but yield went down. Price went up. The actual cost of buying that piece of paper went up. The yield went down. Okay, great. But the dollar weakened. This is a really important part of currency trading. What does it all mean? Well, it means that Americans are freaking out, but the rest of the world isn't. I guess the rest of the world have their own problem. But the dollar's weakened in this, just like in the last 2 days, right? The dollar's down. And that's interesting. So it's not foreigners buying the 10-year T-note, because if foreigners are buying the 10-year T-note, they would have to convert their foreign currency into US dollars first, which means their demand for dollars would go up, which means the US dollar would strengthen, which means euro dollar would fall. Okay? Because it hasn't generally been doing it, I think it's very interesting. So it's a domestic issue going on. Okay? So if that's the case, it's not a systemic problem. What I was talking about was quantitative easing by the Fed drove the stock market and other asset classes artificially high. But it's not a bad thing. That's what quantitative easing does. That's the raison d'etre. So now that we've not only removed that, but now raised interest rates to the point where big I is equal little I, we're at the neutral zone. We're neutral. There's no inflation. There's no interest rate, right? It's all inflation equals interest rate. So there's nothing at all propping it up. Now there's nothing stopping it, but there's nothing propping it up. So we need to find a market value per se, and that's where we are now, kind of figuring out what things should be priced. Okay? So with the stock market decline, let's say, we got our 21.4. You can buy the S&P 500 future, right? But I kind of mock that sometimes, not always, but especially like sector spider ETFs and stuff. Like, really? Talk about selling dumb people stuff, right? Oh, well, this is smart beta. What the hell are you talking about? Right? Products for people that want to avoid doing the work. Well, you should want to do the work. So if I'm right, let's say the stock market, or let's say, the stock market moves sideways. The economy is generally up, slowly up, but generally up, not down. So that means, consumer spending is still happening. People are still using credit cards to buy things they don't need, and they're making their payments, and their housing values are still slightly going up, 2% a year, all this kind of stuff. People still have jobs, and they still get paid, and they still go to work. If that's true, what should we be buying with a 21.4 decline? Who's going to benefit from maybe the economy moving sideways, maybe one more interest rate hike? And I would say things like probably a bank, right? The economy is going to chug along, so they're going to offer all kinds of financial intermediary services. If you've done the fundamental course, you understand what all those are. And interest rates are going to go up, but not much. But they'll still be able to, make because banks are carry traders, right? Right? They're shorting cash and they're long the future, right? So. So it's okay. I think they'll do all right, I think is what it is. But the thing is, did they fall? And I haven't analyzed this. I'm not a stock trader. But if the stock market dropped 21.4%, which to me is a ching look to buy, what would you buy? I would have to look at for banks, and I want to see a bank that will be around 25 years from now because I want to hold it for 25 years. And then I want to see, did it fall as much or nearly as much as the rest of the market? What if the bank fell 25%? Right? So anyways, it's a thought process. Arcat says, when I say sideways, what I mean, forget the pattern of what sideways is. What makes a stock market go up? Okay? And, well, the quantitative easing part is gone. So now we need earnings, and we talked about this yesterday, more particularly not earnings, but profits. And what we're going to find out is there's a few dog with fleas, but there's a lot of mediocre companies as well. They're not dogs, but they're mediocre companies that have benefited from free money creating a rally in the stock market. All ships rose. It didn't matter how many holes were in the ship. They all went up. Yeah, I bought B of A at 5, so I don't know what it is now, but so I'd have to analyze it to see if I want to buy it at 25. I mean, I don't know, maybe, right? But anyway, so now that we're done all of this stuff, we need to find out which ships are leaking, which ones are sailing, and which ones should be sunk. Okay? And that's what, like, a hedge fund manager is supposed to be doing. This is what a stock picker is supposed to be doing. All right? And they haven't done it in almost, like, think about it. I heard a stat today, and I think I heard it on Bloomberg today, where the average person on a trading desk is 35 years old, which means in the 2008 financial crisis, they were all in college. Right? Like, they have no experience and they have no memory of the past. They weren't even there, which is amazing to me, right? Because you would expect someone who should have gone through, you know, this process 2 or 3 times if you were going to give them their money. But now someone's supposed to come in and say, well, I've done the homework. And I think these ones are going to decline a little bit, but they're not bad companies. A couple of these are going to go higher because they're market leaders. They're already, even with the decline, they're already, let's say, fairly valued. You're not going to really get a deal on them. And then these are dogs, man. We should short them or at least stay away from them because they're going to go out of business or something, right? And someone needs to be doing that work. But like when the stock market was just blindly going up based on quantitative easing, okay, that's where, you know, your sector spider ETF nonsense garbage would be all right. But now, doing it now would negate the whole idea that you think you should actually be picking winners and losers. And imagine paying 1% of your entire net worth to somebody that just buys an ETF for you on your behalf, that just says, well, I'm not going to do the work. I'm not going to pick the winners and losers. I will charge you 1% of your net worth, and I'll just buy something that just buys everything else. Because then I'd say, well, if you're not going to do the work, couldn't I just buy the ETF myself and then not pay you 1% of my net worth? It's amazing, right? What do you mean? You're going to index me? But, so anyways, RCATs, that's what I mean by move sideways. If, let's say, if half the market's going to fall and the other half of the market's going to rise, then generally speaking, so I don't know if it's a real pattern, but it'll be sort of like this for a while. Stock pickers will buy things and they will go up in value and you will make money. But on the aggregate, like let's say the S&P 500, okay, the S&P 500, let's say, goes up 5% a year, let's say. But if you have a hedge fund manager, stock picker or something, you might make like 15% a year. Okay, and that's what they're supposed to be doing. And we've gone through almost a generation of people that don't even understand that anymore. Yeah, you're going to have to do the homework and pick the winners and losers. Well, why do I, like, we're currency traders, right? So what do we do now? Well, let me ask you, who got hurt the most when the Fed started to raise interest rates? Interest rates go up, and I'm talking globally now. Who gets hurt? I'm waiting for the delay, a little bit of a delay today. Yeah, emerging markets, thank you. Mingers. I think I know you, Mingers. A Mingers onion. Emerging market, yeah, with US debt. Great, you guys nailed it. So who's going to benefit when the Fed says no more rate hikes? When we move, when the Fed actually hits neutral? Because I think there'll be one hike in 2019, maybe one hike in 2020, right? Who's going to benefit from that? Well, same question. Emerging markets. EM. So that might be interesting, right? Now you got to find a dog with the least amount of fleas. Well, good luck with that, right? But what if oil prices go up, right? And emerging markets rally on the Fed? Then something like USD Mexican peso, right? This would go down. Now, another concept is if macroeconomics are not down, if macroeconomics are like slightly sideways, we get through Brexit and it's not as bad, or maybe it's pushed down the road. I don't know. Europe is still the big question, but let's say China kind of bottoms out and things are okay, then the dollar should weaken. Remember, if the dollar weakens, it's a good thing globally. Everybody wins, including Americans. So we want the dollar to weaken. And if you want emerging markets like Mexico, let's say, to improve, then then we want this to head down. If you're buying EM, okay, could be interesting, right? Yeah, Alan says borrowers, same, it's emerging markets, right? Remember, Turkey got into their problems because they're an emerging market. They borrowed a lot of money because money was free, but their problem was they didn't have cash. Does anyone remember why I said that they actually, it's not that they didn't have money, they didn't have cash. All they had was lira, and lira is worthless. It's because they don't export. Okay, it's a big negative here. They don't export. Like Brazil, for example, is a huge exporter, right? Like soybeans, for example. Just that, they export a huge amount. Okay, so what about Brazil then? If you don't want to invest into Turkey, right? What about Brazil? So that would be your job now as an analyst at a bank, or a trader / analyst at a bank. You'd say, well, if the Fed's going to, if the Fed cycle is done for a few years, emerging markets are going to benefit. I'm going to look at import-export data, and I'm going to blah, 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 invest in one country over another. And then, once you get into Brazil, maybe you get in Mexico, let's say, then maybe you tiptoe into Turkey later or something, right? You see the logic there? Now, isn't this a conversation you should have with your clients? Madam Billionaire, here's how I think we should play with your money. Okay, cool. So, yeah. Now, just to throw you off a little bit, this is the buy zone, okay, for January. What is supposed to happen is this week, right? And is it Friday today? Ooh, Friday. Okay. What's supposed to happen on Fridays? Well, let's back it up. What's supposed to happen this week? And I guess we're looking at this area here. Between this week and next week, Mexican peso is supposed to increase in value, which means bring this down. But notice how the entire month actually, okay, the entire month has been down. Which means, and by the way, did anyone do this trade? Did anyone take the November short and hold it? Oh, is Monday the last day? Cool. Are markets even open on the Monday? I don't even know. Don't even know. Azabul got it? Very cool. Actually, I have to correct you. It's not repatriation. It's a particular, oh, it's a half day, Jimmy? Yeah, so if you, be careful on half days. It's remittance. There's a slight technical difference between repatriation and remittance. Okay? But if you want to be 100% correct, you would say it's Mexican peso remittance. And then in April, we talk about Japanese yen repatriation. Slightly different. Effectively the same, but okay. Anyways, cool. So what's supposed to happen is this. And even though this is a buy zone for bulls, okay, bears figure this will drop. And the reason for it is today and Monday, but see, the holidays really screw things up, right? But over the next, let's say 3 trading days, 2.65 billion is going to be moved from here to here. There's going to be a big trade. A big trade's about to happen, guys. They're loading the account right now to move, starting today, and I think a little on Monday, or the rest on Monday, and then some, I guess, on Wednesday when the market opens back up. But in that 3-day period, 2.65 billion is going to move. So the idea is you front run that. Okay. Typically, like when I'm looking at this now, it's not the right place for it to happen, right? Would you say that if you sold it now, would you be selling low or would you be selling high? And to me, it looks selling low. It looks like you're selling it at support. So we actually need this to rise to get really what I would like. I'd like it to rise before it falls. So yeah, it's not a trade that looks nice to me. You know, it may be one that I would just skip. Because remember, the rules of engagement, it's not just the timing of things. Like if I had shorted it in November and I'm still holding it, I'd have some decisions to make about whether I hang on to this or not. If I were me, you know, I would probably walk away. I certainly wouldn't take a big chunk of client money and dump it on that and go for it. Make a quick buck on the last day of the year, you know. So be cautious of how you play it, that's all. Okay. Look. Bloop. Okay, once again, looks like a downtrend. Current supports here. Trade plan should be something like that. Notice that on a 4-hour, you're out of position, so you should be trading the 21. Well, the 21 in the future is going to be there. So this looks like 2 levels of support. Okay, not a good place to sell. Scalpers that want to jump in front of a moving train are going to look to buy in here because it's support. That's where bulls buy, right? Support. It'd be a very dangerous idea, but that's their call. And then I think, right, so maybe it goes like this. And then maybe at the end of the day, there's going to be an opportunity to sell again and try to catch a trend. And that'll be in here. Maybe. Sort of, this is the support, right? So, looks like Swiss franc weakness. And it looks like, Swiss franc strength and Canadian dollar weakness. So, current trend just kind of continues kind of thing. Okay. Are you playing a top? That would be the question of the day here. Okay, a bear has every right to sell in here. I would set it up as a mini head and shoulders. Okay. Okay, that's how I would set it up. Let me do it again, but differently here. Like this, like this, like this, like this. Okay. If I was a bear, okay, which means probably, where's my mouse? Here we go. Probably in here, I would look to sell. So I wouldn't necessarily sell it now. Try it, changes the blue. I'd let it work its way down. And then on this up rally, I would look to sell. Okay. Here is plan A and plan B is here. Okay. So that's euro dollar. That's dollar strength. That means gold down. Gold is, as you can see, is at a double cluster. We already covered that, but I didn't say it specifically, but let's get in here. Okay, this is the top of the market. This is the monthly pivot. This is the R3, which means because it's R3 and not an M line, it's a mathematically important number. We don't typically hit up there, but by definition, it is resistance inside a take profit zone. Remember, this whole pink area is where bulls are supposed to get out of the market. And clearly somebody played the R3, right? I think you'd agree with that. So there's intelligence here. Okay? There's intelligence here. Here, that was support. And we dip below that support and this support. So this is setting up kind of like this. Okay? So that means if gold goes down, dollar goes up, euro dollar drops. That would mean USD strength. What would that mean? Typically, it means the stock market comes down again. Typically, right? All right, but you see how I jump around? They're all the same trade to me. Stock market comes down, then Aussie yen falls further today. Which means what? You're selling rallies now, right? This is a sell, right? You should know that. Okay, so if Aussie yen falls further today, where is it going to fall? Okay, well, this is an out of position trade, which means you're supposed to sell the 4-hour 21, not the 1-hour 21, not the daily 21, the 4-hour 21. And now we come down here, and this is the short-term target. And that's right out of the swing trading course, guys. How to trade out of position. Out of position. Okay. All of that is just straight out of the swing trading course. So you should know this is the one thing to do is sell it right there. Cool. So now that's probably the target, and voila. But we're stuck between these lines, right? So we'll see how. Okay. So for that to happen, we'd have to have, you know, probably another 500-point drop in the stock market today. Okay. Now here's the interesting thing. The opposite could happen, and we get to the point where things get very binary. So you ask yourself, will the stock market, I'll just pick stock market. It could be any market, and they all sort of lead and follow each other. But this is in the news, right? Okay, let's talk stocks. You ask yourself, you flip a coin, stocks go up today or stocks go down today? If stocks go down today, oil falls, right? Gold rises. No, I'm going to play it the other way. Gold falls, dollar strengthens. So let's say oil falls. So if stocks fall, oil falls, gold falls, dollar rises, so on and so forth. Okay, and Aussie yen falls. Okay, and of course in that situation, amateurs trade USD yen, which makes no sense, right? How many times someone says to me, Wayne, can you do USD yen? I'm like, USD yen? What the heck are you talking about? That's retarded. Who would trade USD yen in this situation? Ross, maybe you should take the swing trading course. It's defined in there very clearly. All right. So anyways, or the exact opposite happens. The stock market rallies, right? Dollar falls, gold goes up, oil goes up, Aussie yen goes up, that kind of stuff, right? Oh, well, it should be. How do you say then out of position? Out of position has to do with no swing entry. Yeah, I thought so. Well, I remember talking about them a million times. And we got them a lot in the last swing trading round. Lots of out of position plays. Is it possible that you were a swing member like in the spring, last spring, and maybe not since September? Would that be the case? I'm trying to figure out a situation where how you wouldn't know them. I know we got a lot of out of position trades in the fall, so maybe it was more clearly defined there. But anyways, out of position means you don't have a proper swing entry. So like, let's say you're a bear and price opens at S1. Okay? But you're a bear and it opens at S1. So it's so unbelievably bearish that you have no bearish swing trade because bears don't sell at S1. You see what I mean? There's no bearish entry at S1. What the heck, right? So your pivots are basically dead for you. Yes, you're a bear, and yes, the market's bearish, but it's so bearish that you're not in a position. You're out of position. Okay, and therefore often you also get you hit targets and you get retracements, and then your position ends up happening. You get a better trade next week, if that makes sense. So, anyways, I'm not sure. So, like I said, in the spring, I don't think we got a lot of out of position setups, but I know we did in the fall, and we talked about them a lot. Okay. And by the way, the new swing trading group starts the 4th of January. So if you guys are going to join the group, you got to do it ASAP. All right, so anyways, that's that. Take a look at this one. Kiwi. Is it any different? Well, it's slightly different. Check this out. Bulls are going to like this. So now I have this in my mind. If the stock market falls today, I want to sell Aussie yen based on my technical analysis. Oops, JPY. I want to sell Aussie yen if the stock market falls based on my technical analysis of that market. But if the stock market rises today, I'd much rather buy Kiwi yen than Aussie yen based on my technical analysis. Fundamentals are the same, but my technical analysis says Kiwi would be better. How nice is that? Is that nice? It's helpful information. Now, when was it? I remember drawing these. It was last week, it looks like, but I think we were talking about if it broke below there, but I remember going through and finding these levels. This one got blown through. Now we're here. The next one's way down here. If the stock, remember, all right, so if the stock market falls today, remember I said I'd probably short Aussie yen. This one would drop into this zone, and we'd probably end in here today if the stock market falls. But you may not get a proper technical entry, but we'd have to analyze it on a smaller time frame. Aussie Kiwi. Okay, Aussie Kiwi, sure. Why would you trade one against the other, though, Andres? Do you think there's a massive difference between the two economies? And their trading, more importantly, not just one versus them, but their trading partners? Because remember, foreign exchanges has to do with money crossing borders. So unless you're an Australian or a New Zealander, often that one is an odd one for me to want to trade. Okay, but here it is, Andres. All right, so going back to Ross. Ross, do you see how this is out of position? If you're a bear? If you're a bull, you had a shot and it failed. Where's my buddy Ross? So as a bear, Aussie Kiwi opened out of position. So you're supposed to trade the 4-hour 21, which means, there's a sell, there's a sell, there's a sell, and now we're out. Okay? You got that, Ross? That's what I mean by out of position. Well, Jaden, we're at a technical place where bulls would consider buying. The problem, though, Jaden, is that the market is bearish. So you must be so clear. I mean, you should even write it down. I'm taking a high level of risk. For some reason, you want to be a bull in a bearish market. So you're either a genius or an idiot. And only time will tell, right? So you need to be very clear. And then if you see the risk, if you recognize the risk and acknowledge there's risk, then you'd better have a plan to manage that risk. So maybe you want to go in with a smaller lot size or something, right? But a smaller stop is generally not the right idea. I would cut my lot size in half and double my stop, right? That kind of stuff. And then you better have that stock market rally I talked about. Okay, Jaden? Otherwise, you're just buying because of price. That's not a plan. Buying because it's 74.40 is not a good decision. It's not even a decision. It's a bet. It's a gamble. I bet you 74.39.999 will hold. Well, that's a bet. But if the stock market was rallying and you noticed a reversal pattern at that price, put in a half-size lot and let it reverse and then maybe add the other half later on a dip, yeah, that would be smarter. We can go back to that now. Where is it? Gee whiz. I wish MT4 would make these alphabetical. So what did you say? 74.39. Wayne, you were buying. That's 75.30. I can't even figure out what you're doing here. What, this? Because of up in here? Well, right now 74 is better. It's actually 73.97. So I don't know how you came up with 79.40, but I guess you're looking at this. But yeah, I can't figure out how you came up with 79.40 as a buy. That makes no sense. Sorry. Let me change this to red again. How do you see that as support? I can't figure that one out. That's within a half a pip of your number. How is that support? I mean, how are you way out on a daily chart or something? It's this, I guess you're playing, which I haven't marked, but I have it marked as a zone. Yeah, 74.39. That's what that is. Okay, so I'm zoomed in now. This is 74.39 and 74.32 or 38.2. Okay. Yeah, see, I don't see it. Right now, remember I analyzed and I thought the stock market looked like it wanted to come down today. In that case, you're doing stuff like this. But for this to be a buy, my God, we need to up and down and up and down and up and down. I mean, is that going to happen today on a 15-minute chart? How long is that? Each cycle, 3 hours up, 2 hours down. So that's 3, 5, 8, 10, 13. That's 15 hours from now. Oh, I know what it is, Guy, but how do you buy it properly? See, guys, you don't just say, it's last month's pivot, so boom, you just buy it. That's gambling. I bet you WM3 holds. All right, maybe on a $5,000 account, but not on a $50 million account, right? So right now, technically, this is unbelievably bearish, right? Lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? Consolidation, lower low, lower high, lower low, lower high, lower low, lower high, lower low, la 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 la. And so his support's up here, like we're like it would take 24 hours to get that to be bullish, right? Oh, was it sell? Good decision for... No, he said was buying at 74.39. So I'm sorry, Jaden. No. Yeah, we're a long ways from that. Now, if you bought this down here, first of all, you were very aggressive on your entry. And here's another thing. Let me throw this out. I sort of have an 80-20 rule, and it gets complicated because it has to do with stops, so I don't want to talk about this. I want to talk about this slightly different. Most entries are going to occur around 0, 0. That's what the 80-20 is about, right? 80 is below, 20 is above. But a lot of setups are happening around numbers that are like XX000. We call them big psych levels. Psychological levels, like 7400. Okay? The other one is midpoint psychs, which is XX.50. Okay? But like this zone of like, let's say 20 to 50, or in this case, you know, your 39 number, is a really bizarro number. XX39 is like, it's sort of a meaningless number. So just by the definition of it being at 39 in the middle of the range is a big clue that it probably isn't going to be right. That there are bears that are going to sell above it and bulls that are going to buy below it. And we're not entirely sure which one's right. So it's sort of, you're in nomad's land is another way of saying it. So like, I don't know if you actually bought it already and that's why you're asking me. Like, if you bought it here because that was your plan, you thought this was going to 1, 2, 3. Okay, I get that. But really, that should have happened up here. So once again, I'm talking about a midpoint psych level. My plan would have been up here. Your plan is down here, and it's sort of like, really? Because I'd rather, if it didn't rally here, then I would say double bottom, which is now down there. So my plan A would be here. This would be plan A. I'm very bullish. Plan B, I'm playing a double bottom, which is not quite bullish, but looking for a reversal. But like this is sort of nomad's land, not really sure what's going on. And you can see that you never really even got a rally. I mean, maybe you played it on here on a 1 minute. So, okay, all of that being said, you should have been knocked out for a loss by now. So even if you did buy it here, you know, especially this, you should have been taken out by now because we're making lower lows and you shouldn't be long in a falling market. So that's why I'm scratching my head multiple ways. You shouldn't be in. You didn't get quite an entry. Your price is not quite at the right place. You're either too, right? So remember I was talking about the 50 and the 0, 0. Here's the midpoint psych level off of this. I get that. That's a buy if you're a bull, especially after this move. If you bought in here, I could see that all day long. And then the double bottom makes sense to me too, right? If you're a bull and you're playing a double bottom, I might disagree with you, but I understand what you're doing. It's a beautiful play off 74. Double bottom makes a ton of sense to me. And then there's this, which is the exact wrong place to be. And I'm not trying to insult you, so I hope you're okay with the clarity of my my feedback. But that makes no sense. And if you're buying next week's pivot or next month's pivot, okay, I get that too. Technically, that makes a sense, but you're betting. And your strategy's okay. You know, I could be in a coffee shop and you're like, Wayne, so I'm going to buy like next month's M3. Sorry, next month's M2, or I'm going to sell next month's M3, or next week's M2, or okay, great. All that's great. I understand the strategy makes sense, but your tactics would be pathetic. So you need to work on that. Okay, so I'm just being clear on that. We don't have a lot of time for me to be politically correct. This is a terrible place to buy. Okay. I hope I wasn't too harsh. All right, so there's that. Yeah. What time is it? Yeah, we got time for one or two more, guys. Anyone else going to be brave enough to get some honest feedback? They're like, whoa, Wayne just ripped that guy. I didn't mean to. But I got to be clear that, you know, there's a problem with that entry. And even a little bit with the strategy. Okay, Joe. Aussie dollar. Okay, if the stock market falls today, what's going to happen? Aussie dollar falls. If the stock market rallies today, what's going to happen? Aussie dollar goes up. Looking for a buy, counter trend. Okay? Not well. Okay, let's go through this. Is this support? Yes. So is Joe allowed to look? Yeah. Yeah, Jaden, maybe I'd even start with maybe the beginner's course or intermediate stuff at FX Bootcamp if you're going to invest in your education. Anyways, or you know what you need is a performance coaching. Someone to walk you through trade plan after trade plan after trade plan until you could do this. Anyways, we're at support, so Joe has permission to consider. Okay? This is where bears are supposed to get out in a normal world. Okay, is it a normal world right now? That's debatable, but it is support. And this looks good for next month. But we're riding the 21 on the 4. And that's aggressively bearish. But we're aggressively support. So this is a good place, Joe. Good job of finding a good setup. Okay, so strategically, is Joe allowed to consider buying here if Joe is a bull? The answer is yes. He can consider it. It doesn't mean there's a trade. It's just a proper place for a strategy. So it's a good place for an ambush. Great. Let's drop into a smaller time frame. What does Joe want to see? Well, we need to confirm that this area here is holding as support. Higher high, higher low. That's pretty decent. Higher high, higher low. This could be decent. There's still a lot of stress around this and around this, right? So we got to mark that as an area of concern. Do you remember that midpoint psych level conversation we just had? Where is it? midpoint psych level. We want it at 70.50. There's, okay. That's the midpoint psych level. And just for fun, let's do another one at 74, just for the example, or 70.000. Okay, and it's not on the chart. It's below us. Cool. All right. So it would be fantastic for Joe to have a dip that comes into this area here and then rally. There's got to be a challenge up here. We know that. So there's at least a scalp. Okay. Also, we need the stock market to rally. Okay. And it's 8:45 now, and that market opens at 8:30. Don't be shocked if this drops like a ton of bricks and then rallies like this at the end of the day. Or vice versa. Canlin doesn't like me teaching technical analysis. All right. I'm just teaching technical analysis, Canlin. So in this case, I have no opinion. What we're doing is simply technical analysis. If Joe wants to buy this, based on technical analysis, this would be a reasonable place to look for the next leg up, Canlin. So I'm not talking hindsight. I'm talking about what's going to happen probably in the next half an hour. So Joe wants to see this, 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 this. And somewhere along there, we need this to hold. Okay? But we need the stock market to rally too, because what we want in this scenario is risk on. Right? Stocks up. So let's say risk up, stocks up, oil up, dollar down, gold up, yen down, Swissy down, bonds down, soybean meal up. You know, like it's just one trade after another, after another, after another, based on one idea. That macroeconomics. Okay. So as Joe is looking for green here, current low of this candle is 70. I can't even, where do you look on this? Oh, on this one. Where is it? Open low. 170.51. We're talking about, we wanted 170.50 is what I marked. So we're within 1 or 2 pips of what I just explained 10 minutes ago as being a more important area to look for buyers. So sometimes when I'm in this situation waiting for a setup, I leave myself markers to explain what the scenario I'm looking for. Okay? If this drops down into here, it's not the bullish setup that I wanted. In fact, if this fell down to here, what I would expect is a rally and then a drop, and it'd almost be like a head and shoulders type thing. Okay, so I don't want to see that. So if you were to have a Fibonacci study, what you want to see is a 618 Fibonacci retracement and then a 1382 extension, right? So it's got to happen here if it's going to happen. And if it falls lower than this line, then Joe's got a real problem with the setup. Edward says he's long USD CAD. So what that means to me is what? Stock market down, oil down. Okay. I'm waiting to take profit at 137. Well, is that an important target? Why 137? Obviously, it's a psych level, but is it a daily pivot point, a weekly pivot point, a monthly pivot point? Is it a double top based on price action? Right? Those are the more important things than 135.70, I guess. So that, okay, let's go back to that. Oh, you're long at 135.70. Okay, again, that's sort of a weird number to be long based on our previous conversation. And you want to take profit at 137. Okay, well, you know, maybe, right? Let's let this run a little bit longer, and then we'll zip over there. Okay. And if it helps you, put the fibs there. I always forget. I see the fibs, but I don't draw them, so I should draw them for you. Okay? So based on Fibonacci analysis, this is your buy zone. Okay? And that would be Joe's trade plan. So if Joe takes this on a 1-minute or a 5-minute chart based on his technical analysis, I would start with a stop there, and I'd feel very uncomfortable below this line. Okay. All right. Let's go back to USD CAD for Edward. Oh, and by the way, going back to Joe's thing, you're on that monthly pivot point again. So if you're going to be wrong, it's probably going to happen there based on the monthly pivot being there, which is another reason why you shouldn't buy high in those weird places. You want to be as close to that midpoint psych level as possible. All right, so the question that Ed has, Edward says, is 137 too aggressive? So my first question is like, what's 137? So let's mark it with this. And we go to the properties and we say 137.00. So, okay. So there's Ed's target. Let's see. Okay. All right. Well, it's almost a pivot. It's almost a weekly target. All right, well, let's take a look at this. It's a weekly out of position play. And out of position plays are not good because sometimes it opens up like on a Monday and aggressively skyrockets, hits at the target, and then completely collapses. But when a market opens extremely bearish or extremely bullish, those traders have made too much money too quickly, and they're looking to get out. they're looking for any reason to take profit. So they're generally not good markets to enter a new trade. They're good markets to even counter trend. So you kind of have to be careful there, right? So let's go in here a little further if I can. So I don't like that it's not a good bullish market, but it's a bullish market. If I were to go up to 137, the entry is here, right? That's a very simple price action entry. The target weekly is here, but in this situation where you're out of position, we're typically hitting that target Monday and Tuesday, maybe Wednesday. Well, it's Friday. But then the caveat, well, okay, it's Friday, so it's late, which typically would not be a good sign. But we had the holidays and Christmas and stuff, so it's sort of a mixed bag here. Obviously, the technical target is here on a weekly basis. This is what is that? M5? So I don't know how to treat M5, to be honest with you. I don't know what M5 is. So maybe we just kind of throw it in there because it ends up being a target anyways. Your 137 says you want to get out a little bit early. I'm okay with that. I'm okay with 137 getting out early only because, well, it's a weird week anyways. And it's the end of the year, basically. Yeah. Just like, yeah. It's really going to come down to what happens today. Okay, Edward? If the stock market opens very bullish, opens, not ends, opens. If we get a big stock market rally, like 500 points or more at the open, you may get one of these things. This is the exact price you'd expect that to happen, R3. I don't see it happening, but if it did, just walk away. Just be more eager to get out. Certainly don't add more. And then is your 137 too aggressive? It's not too aggressive. It's technically fine. What bothers me is just sort of the day. It's pretty late in the season. I don't know if we can trust that, but getting out a little bit too early is not too aggressive. I mean, technically, I would say you're supposed to get out at like 37.11 or something, 37.12 to 37.50. But who cares about all that? So, yeah, if you got a chance to stay in this today and hit 37 on the last full trading day of the year, is it too conservative to take or even too aggressive to take profit up there? No, I think that'd be all right, Ed. Oh, on the weekly chart, you're doing this? Yeah, see, I don't do that, Ed. I got 9 other reasons besides that. Okay? And what was happening with USD CAD in March of 2017? Are the fundamentals the same here in March of 2017 as basically January 1st of 2019? No. They're not. They're not the same. Technically, they're the same, but that doesn't tell me that we can't go up here. And it doesn't tell me we have to go down here. Okay? Okay? Like, these are a Fed meeting probably created that move. Okay? So don't go so far back that all you're doing is technical analysis. I always caution people on that. Technical analysis isn't the only thing going on. In fact, it doesn't even create the moves. Okay? Like if this was a Fed meeting, okay, if this was a Fed meeting that created this downward move, we're not going to have the Fed meeting here just because of this price. So the fundamentals are first and foremost most important, right? And then you do technical analysis. So, okay, there's some price action resistance up there, but that's neither here nor there because we already got this marked up 9 other ways on smaller time frames. Okay? So, yeah, you're 137 to take a profit. Yeah, just to be conservative for sure. If you were certain in every bone in your body that the stock market was going to continue to fall, then there's more room for this, okay? But that's a high level of certainty that you would need to have. Take care, Team Sound Zone. It's analysis, FA. I'm teaching people how to do analysis. It sounds like maybe you're too advanced. But then again, why would you care what I thought if you were that advanced? Well, I guess it's been almost an hour and a half. It's almost 9 o'clock. Guess we should pull the plug here. And I bid you adieu. Thank you for hanging with me on this wonderful Friday morning. Thank you for being on my team. Thank you for being a part of my life. Trading can be lonely, so I really appreciate being with you. Like, remember, like, as I walk through my normal day, I don't run into other currency traders. You know, I was at a Christmas party, met some dude, a friend of my wife's, and we're talking and all that kind of stuff. I just heard, like, he told her, and then she told my wife, and my wife told me. She's like, he was really, he thought you were really smart and really liked what you did, and blah, 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 blah. I'm like, you know, I can, but I don't find other currency traders. I never get to find someone that wants to talk global macroeconomics. They want me to tell them stuff, but I'd like it, you know, like, so I'm so happy to be with you every day where we can talk about, you know, the Japanese political elections, and, you know, like Brazilian soybeans and, you know, Russian central banking policies and Turkey lacking cash because they don't export enough and they can't afford to pay their foreign loans. And I mean, I'm really grateful that you're in my life, and these are our hour and a half every day. I really enjoy. So thank you for that. I'd like to try to make a few changes in the future. I'd like maybe like my idea yesterday has been on my mind where maybe we can do like a call in and I do 1 or 2 interviews, not interviews, but have you call in and we talk about stuff, you and I, and then someone else does that tomorrow, all that kind of stuff. Benny Blanco says that weekly top on USD CAD is a technical level. Well, of course, it is a technical level. It's not going to control the entire market. If the S&P 500 wants to crash 800 to 1,000 points today, we're gonna break that. And I mean, what's happening is significantly more important than what happened back in 2017. Now, am I saying it's not important? No, I didn't say that. But it's not creating our market. If you thought that $1 trillion is going to move from the U.S. economy to the Canadian economy because of some price that happened back in early 2017, I would argue against that all day. But the problem is, well, I can't prove to you that if something happens, it's because of one thing and not of another thing. But look, and I explained this yesterday. I'm a businessman. So when $1 trillion moves from USD to Canada, I'm saying it's because of money, it's because of interest rates, it's because of economic conditions and investment, all that kind of stuff, not because of a line on a chart from back there in 2017. That being said, well, technical analysis is important, but it doesn't create the trades. Right? Yeah, okay, so Benny disagrees with me. It's not business cycles and central banking initiatives. It's a price. Okay, well, you and I, we can talk about it, but, I mean, you can't prove it, nor can I prove it. Based on the analysis, the same level is a technical. Well, of course, any line is going to be a technical level. Was that resistance in the past? Yes, absolutely. But you know what, Benny? If if fundamentals dictated, like, let's say over the course of January, the stock market drop continues. Okay, Benny? I'll probably end up using that technical line as support. After we break it, come back, I'll buy it, and we go back up. It is an important line. It doesn't create the market. Okay? Yeah, well, Benny, but yes, my time frame's probably larger. Yeah, you probably can get a day trade out of it. But look, if you're buying CAD on a day the stock market drops 800 pips, you're going to get wiped. I would rather say, let's say the stock market crashes and the USD CAD goes up, I would probably buy a dip back to that line. As a role reversal, resistance becomes support and off it goes. But I'm using it, see, technicals are for entries, okay? Fundamentals are for strategies, knowing whether you should be a bull or a bear. Okay? And you're right, not every line is, but okay, you're getting almost argumentative. Yes, okay, not every line is technical analysis. That is definitely an important level. I'm agreeing with you in that case. Okay? Yeah, okay? I agree with you. It's definitely technical analysis. It's definitely a line to pay attention to. I also have very similar analysis, but on smaller time frames. And I'm saying, like, a weekly chart versus my 4-hour chart. If we both agree that elevated level is going to be a resistance, and that's cool. But I'm saying my 4-hour is going to trump the weekly. Now you say, well, weekly, it's bigger and everybody sees it and stuff. But I overshadow that with my current market conditions based on fundamentals. If the Fed wants to come out and kill that market, it's going to kill the market. If something else happens to move the market the other way, that's what's going to happen. Current market conditions are more important than what happened in March 2017. Now, am I saying ignore it and just blow through it? No, of course not. That'd be silly. Okay? Well, okay, Benny. Okay, so Benny's saying this, that I'm wrong, that technicals don't move the market. That's not what I meant. If I said that, I apologize. I love technical analysis, Benny. Okay? Technicals definitely. Like if I didn't use technicals, I would just have I would have a blank chart. My chart would be blank. Not blank. Naked. Do I have a naked chart on this one? Okay, I'd have this. But I suppose even then I would still have that. Okay, they definitely do. Okay, do you understand it? I'm agreeing with you. Is that what moves markets, or is that what traders play? And I think if you paid attention in here, Okay, you would get a play. Sure, you could trade off that. Sure. I'm asking. Oh, I'm sorry. I'm supposed to be over here. So I did it this way. If I'd have a naked chart, let me go back to here. Would we get a play off of this? Oh yeah, sure. But that's all it is. That would be a shorter term trade. Maybe it makes you, let's say even for a week, you're right. And you get some great day trades out of it. Right? That's cool. Right? Okay? But there's the direction of like, where is the commodity and financial market going to be over the course of the next 3, 6, and 12 months? And that will dictate well beyond this price level where the market is going. That will dictate whether we're going here. This would be a very bad macroeconomic scenario, or a very good macroeconomic scenario is here. Okay, so could you get one of these things? Oh yeah. Okay, which is fine. And so you're saying this could come down here and maybe even down further. Yeah, that is true. Okay, and there could be a play in here for sure because of that, granted. But I'm also on top of that trying to figure out, are we on our way here or are we on our way here? And it helps me know how aggressive I should be here and how concerned I should be here. Okay? So if I said ignore this, I shouldn't have. If I sounded like I did, I certainly didn't mean to. I'm just much more interested in, if this happens, you know, the U.S. dollar should weaken, the Canadian dollar should weaken, you know, the stock market's rallying, the bond market's falling, oil is going up. You know, I'm just doing 9 other trades that have nothing to do with that level at all. Nothing. Right. So Benny says, what moves the market are buyers or sellers? Yeah. Okay. But if that's all you think is going on and that is moving the global market, this price here on this pair on USD CAD, no, dude, no. Okay. What I'm saying is the global market moves and moves CAD along with it based on not even buying and selling of this pair like you're talking about it. It's more like CAD benefits from the fact that Europe improves, you know, structurally and otherwise their economy, which increases demand in China for natural resources because their economy is picking up because of demand from Europe, because Europe fixes things. And therefore, the increased demand for commodities goes up, and USD CAD moves this way because macroeconomics also weakens the dollar, but also Aussie would go up, and Kiwi would go up, and oil would go up, and, you know, and dollar would fall, and, you know, Swissy would fall, and yen would fall, and like there's 90 other trades going on that all overlap, but it's not because of this price. Now, is this price important? Oh, for sure. We can set some trades up here, and I would even, like I was saying before, I'd even use it as support. I could use it as resistance. I could use it as support. So it's definitely key, but it doesn't tell me if we're going here or going here. And those are the sort of the bigger questions I'm trying to get to along the way. Can you day trade this down and stuff for a week or two? Oh, sure. Yeah, absolutely. And you would do it. But to me, it's like It's not that important. I mean, it's just a series of some trades. But where you get the big money is working your way here or here. Getting the direction and the reasoning for the direction is so much more important than what do we do here for the next week or two. And I'm suggesting the macroeconomic conditions that created this may be different. That's all I'm saying. May be different than the macroeconomic conditions that we have here. This says stock market rally. So the U.S. stock market lost 20%, okay, from the peak to our recent low. Do you think we're going to drop another 20%, or do you think we're going to recover? And then the next question is, when? Okay, now if you think the stock market's going to recover, is it now or is it going to be in 3 months? Well, whenever you answer that, like if you think the stock market's going to recover, you're going to sell here, or you're going to sell. You think CAD would benefit and US dollar would weaken for macroeconomic conditions and what happens to these currency pairs. Great. Then I would go to a chart and say, oh, Gagzeus, this looks like a fantastic place to sell if the stock market rallies and if oil recovers because of said stock market rally. Because we know the correlation between the U.S. stock market and oil is quite high. But I wouldn't say oil's going up and the S&P 500 is going up because our USD CAD hit this level here. Okay? Okay? So I agree with you. We need the buyers. We need the sellers. I'm saying the buyers and sellers, some technical, shorter term, day trader guys are going to be here, and that's cool. That's cool. But the bigger move will be created not because of that, because of other reasons. Yes, you should be aware of this. Yes, you should set things up or can move your stops or whatever. But beyond that, the bigger question is why, not what. And this is a what. This is the price in which there has been resistance, probably will be resistance or support in the future. Ignore it at your own peril, but don't, right? I'm not suggesting ignore it. Okay? All right. All right. Well, for example, anyways, we can't go on. We're going in circles, Benny. And partially because, you have to chat and stuff like that. But if you think you're going to move the entire S&P 500 and the bond market and the oil market because of this price, then I don't know. I can't make myself any clearer than that. Okay? You see what I mean? I think that's a place to take profit. I think if you see the stock market reverse, that's a great place to sell. But I don't think you're going to reverse the S&P 500, reverse gold, reverse the bond market, reverse all of this stuff because of that price on your USD CAD chart. That's all. Right? So anyways, thank you for the conversation, Benny. Okay. Then we'll just say it's the limitation of this forum. So anyways, I hope we're fine, Benny. Okay. So anyways, have a wonderful holiday, a safe New Year. Well, wait, New Year's is and just in case I don't see you, because it's only a half day, we shouldn't even really. But anyways, take care of yourself, guys. Happy New Year if I don't see you. Thank you to everyone who participates. Thank you for the questions and all that kind of stuff. So anyways. Right, totally, Betty. All right, so take care, guys. Thank you again for being on my team, and thank you for being a client of Trader's Way. If you're not a client of Trader's Way, then you're a lurker. And your mother would be very disappointed and maybe even embarrassed that her child is, hanging out in a forum that they believe is helpful, and yet they're not participating in the community. You should be at tradersway.com as a client. I hope you know that. You should go to Traders Way, at least open a demo account for now, and maybe over the next 2 or 3 or 4 or 6 months, 8 months or 12 months, when you'll eventually develop a relationship with us and open up an account. Yeah, I didn't do the cigar fund this year. I appreciate that, though, Ron. But anyways, yeah. So thank you, guys.